FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, let's take a look at some of the daily setups that were available for Sunday, Monday during the start of the week. And then we'll also take a look at some different analysis for the rest of the week. All right, so without further ado guys, let's go ahead and literally jump right into it and let's break down these charts for you. All right, so let's go ahead and start off with Euro JPY. So on Euro JPY, what we can see is essentially you can see Sunday, Monday, which was yesterday, we had all of the EMAs literally going straight through price. So that's the first obvious thing that you should notice about this particular pair. So what does that mean? Anytime that you see the EMA is going straight through price like this, all right, so if we go back to that particular time frame here, right before the beginning of the London session, whenever you see this behavior here, essentially one of two things is going to happen. You're basically going to have a lot of consolidation for one, because all of the EMAs are going straight through price. So that's one behavior you can expect to happen. Second thing is if you have consolidation in London, all right, the setup essentially should happen in the US session. Doesn't always, but the majority of the time, whenever you have consolidation in London, the setup typically happens in the US session, and it comes, typically you get that false move out of that structure between 7 and 8 o'clock in the morning, right before the US session starts. So here on this particular pair, you can see that it did actually produce a trade setup during the London session. That trade setup basically being a type 3. You can see essentially that price is moving. Price is basically moving from the bottom to the top, right to the middle, and it's basically getting stuck in the middle every time. So it's basically creating a nice little W here, type 3 setup from the middle of the Asian range, and you can see obviously it's pinning to the middle of the range and also to all the EMAs as well. So all the bigger EMAs, the 200, the 800, the 50 is right there. So it's basically holding up price. So all it's doing is basically pushing up price. So if you took this as a type 3 setup, essentially what was the setup for you to take would have been something like this, because I know some of you guys actually took it. So here's what the setup would have looked like, or what you should have been looking for is something like this. So set up something like that that gives you a 2-to-1 risk to reward ratio and stuff like that. All right, so that's basically the setup. 30 pips. You don't have the EMAs in your favor, obviously, so you can't use them. Right, so you just go strictly 30 pips and that's it. So a couple things to consider is, what confirmations do you have of this being a type 3 setup? Obviously you have the pattern, right? So the pattern is here. You have, the W here to go up, right? That's one thing. Another thing that you would have is you have the TDI also creating a W bouncing off the 50 as well. So that's all good, right? So that's a good thing. So those are all things that you can use to help confirm or give you extra, confirmation of the actual trade setup. Now, the one thing that you have against you really is the fact that you have all of the EMAs together. So the likelihood of this actually breaking out are small because of the EMAs going straight through price. You really should expect a lot of sideways movement. Okay, and so the breakout really comes at the end of this particular movement. You don't have a lot to go off of, obviously, concerning, let's say, like a weekly cycle or anything like that, because it's Sunday, Monday. The week is just literally starting. All right, so the only thing that you have to go off of really is, like, let's say, levels, right? And so if you're thinking that this right here is the bottom, if this right here is the bottom, all right, so call it peak formation low or whatnots, you have to understand that this right here, this entire thing is just one level. Okay, This entire thing here is one level. All right, so if you go up to, like, let's say a 1 hour time frame, you can see you've been stuck here in this price movement for a while, and you can see the EMAs coming together. So you're stuck there for a while. All right, so let's just say you take the trade anyways. All right, and here, pay attention to this right here. If you're in this trade, okay, and you took this trade right after this this candle here, and you took it as a type 3, and you come across this right here. If you come across this right here, this is basically what? A railroad track, right? There's a reason that this is coming back. Okay, there's a reason that this is coming back. So as you play this along, you could basically start to see what it's doing. It's actually building an M to go down. So if you see that, if you take this as a type 3 and you see this behavior, okay, and you see the railroad track coming back down again, all right, you have to start thinking about this as a possible break-even trade. All right, so you have really two options. You can go ahead and move your stop loss to break even and let it take you out as a break-even trade so there's no loss. Okay, or take the small profit that you have on this. And so, you know, if you take the trade here, depending on how far you let this go, I mean, you're looking at literally 10, you know, pips or so in profit with the spread. I mean, really, you're looking at 5 pips. Like I said, it's almost like a break-even trade anyways, you know. So with that being said, don't get discouraged about the fact that this trade didn't work out for you. Just keep watching to see the setup that happens in the New York session. All right, and there, right there, is your setup in the New York session. So if this was going to be a setup that you can take back down, because essentially you were wrong here in a type 3, and the faster you can get over the fact that you were wrong, you can go ahead and take the actual good trade, which is a type 1 here, coming back down in the New York session. So you can see that the next candle gives you a pullback, and that pullback is what you can use basically for your entry. So the pullback is always going to be hugely important because you can use that for your entry. You use a 15 pip stop loss, and then now you can aim towards 30 pips. Basically, you can aim towards this line here, which is yesterday's previous week's low. So you can aim towards that line. That's about 34 pips. That gives you about a 2-to-1 risk to reward ratio. All right. And you can see literally it goes to that line, pins it, and then you can see what happens here. It just consolidates for the rest of the day. Okay. So if you take this trade as a type 3, which there's nothing wrong with you taking this trade as a type 3 as long as you have your confirmations and as long as it's in your plan to trade this. Okay, you can take the trade. Just if you take the trade, don't be scared to take a break-even trade if you're wrong in the direction that it's going in. I think a lot of you guys get stuck in the fact that you don't want to be wrong. And the fact is, you're going to be wrong all the time. The problem is that you care too much about being wrong. The difference between me and retail traders is that I can give two craps about me being wrong. I just move on to the rest, to another trade. I don't care if I'm wrong. If you manage your risk, if you're using proper risk management on your trade and on your account with your capital, then it shouldn't matter for you to be wrong or take a break-even trade. If you guys are thinking that break-even trade are losses, that's going to be a problem for you because your mindset is jacked up. If you're thinking that break-even trades are losses. Okay? So this was a trade that was available here for Euro JPY in the US session. All right. Let's take a look at another trade, which was pound JPY, again in the US session. So you could see that during the London session, we had basically a move straight up to create the first leg, came down, second leg ended in a star pattern. Do you see that? Second leg right here ended in a star pattern right there. That is your entry. And you even got a pullback on the next candle to even make it a better entry. So anywhere up here would have been a better entry on the star pattern. If you're more a conservative trader, and let's say you're looking for a close of at least the 13 EMA as your entry, then this candle would have been the close of the 13 EMA, and then the next candle, again, you wait for a pullback. You had a pullback of the whole freaking candle, so you had almost the exact same entry as the previous candle. Okay? Same thing, 15 pips stop loss. All right, and then you're basically going 30 pips, which is literally right here. I mean, you could see within 2 candles, you were done with that trade, 2-to-1 risk to reward ratio. Okay. Pinning to the 200 here as well as a confirmation. So you had the pattern, the timing, and then you had the EMA here that's pins to it. Now, if you look at this on a 1 hour chart, you can see that price just goes up. All this is doing here when price goes up and goes past this is getting as many people as possible to buy. Okay, because remember, there's breakout traders that trade, once price breaks above an EMA. So this is a 50 EMA on the 1 hour time frame. Look at that big wick. Look at that big ass wick right there on that candle. You can't tell me what they're doing right there. So if you can understand the behavior that's happening here, it's going to give you a huge advantage. All right. You can see on the TDI here how you have one leg how you have the first leg here. First leg is here, and then the second leg is actually lower and goes straight down. All right. So that trade was well off 2-to-1 risk reward ratio, 30 pips and 2 candles, and you were done. It went down, you could see about 55 pips or so, but 30 pips throughout and 2 candles. I mean, who's going to complain about that? All right. You have all the bigger EMAs above you, right? So the 800, this is the 50 on a 4 hour. This is, of course, the 50 on the 1 hour. So all that's above you. So price is still going down. So why are you not going down with it? All right. Very similar trade setup on pound AUD. So here's a couple things that I want you guys to notice is that when you guys are looking for pairs to trade, right? If pound USD is one of your pairs, look at the different setups that you're getting between pound USD, pound JPY, pound AUD, right? So just because you like or you're trading pound USD or it's a pair that you like doesn't necessarily mean that it's the best setup out of all the pound pairs. So if you're a trader that likes to trade all of the different pound pairs, You have to look at all of them, not just your favorite one, and you have to really analyze with yourself, okay, which one gives me the better setup? Which one gives me the better confirmations? Which one's more clear to understand what's happening? And in this case, the setups that were clear were not the usual pound USD, pound CAD, or any of those. They're pound JPY and pound AUD. You can see clear setups on these particular pairs. Clear setups. There's your first. This one actually had 3 legs to it. This is the first one, second one here, and then they came up for a third one. Why would they come up for a third one? And look each time. So each time they went a little bit higher, and then dropped. All right. So every time they get more traders to go long, because remember, all the retail traders are thinking is this. They're thinking that, right? So they get them to do that. So the trade setup here on pound JPY, if you're an aggressive trader, it's this right here, this candle closing below the 13. Next candle, again, gives you a pullback. So that pullback could be used for your entry. Same thing, 15 pips stop loss. And then you're going literally 30 pips, 2-to-1 risk to reward ratio. I mean, again, you were out in like literally 2 candles, 3 candles. I mean, this went down total of like 64 pips or something like that. But again, you were out pretty easy in 2 candles. So, I mean, who can complain about that? So these were the setups that you should be looking for. Another one that happened was on Euro NZD. Another type 1 setup on Euro NZD. And you could see essentially up here what happened. First leg was created here, and then it didn't even need basically to come back up for a second leg. So you just had basically this right here come down, and then it just fell off. All right, so the entry again closed below the 13 EMA, which is right here, and 10 pips stop loss, and then I mean you can see what 45 pips, 50 pips on this particular pair. Sometimes on these NZD pairs, you should actually use sometimes a bigger stop loss because of the pip value on these NZD pairs is extremely higher than normal than pound USD or Euro USD and stuff like that. So keep that in mind. But again, the setups are clear. That's the main point. Is the setups are clear. If we look at gold, gold gave us a nice type 2 pattern. If we go back here, nice type 2 pattern on gold. You can see we consolidated a lot during London, and then we got the first leg here, came back up, second leg on a railroad track, boom, and it just took off. That was a killer trade. That trade paid out tremendously. So type 2 pattern, you could see gold. If we go to a higher time frame, let's go up here. You can see what it's doing here. You had the pullback already on gold, and so if we draw just some quick lines here, you can see that it's been basically collecting for quite some time now. And the next pulls that I'm expecting or wanting to see on this, on gold, is essentially going up to these highs up here. So I would like to see gold. Let me get rid of all this. There we go. I would like to see gold get up to this one, this high up here. So this one, and then ultimately this one's next, and then obviously the next one is up here. So I'm just following literally the structure that gold is giving out. So the next target is around 1991, 1992. That's what I'm wanting to get up to. The smaller targets, though, are going to be right here, 1971, 1972, where these highs were right here, where the structure was. Right here from all these little candles here. The bigger pictures are going to be 1992, 2016, and then 2075, obviously. Obviously, that's going to take some time, but it is definitely very possible for it to get there. So that's what that was a trade available on gold. Now let's take a look at the dollar index real quick. As the dollar index, so on the dollar index, we go up to, let's say, like a daily. You could see what it is doing here on the daily. I have this dollar index basically trying to work its way down to this area here, to this area of structure, to where this box is. So it's been working its way down. You can see if we look to the left, this is all open space, right? All this is open space. There's nothing here. There's no real structure here to stop it from trying to get down here. So you can see the current structure of this is it's working its way, in this little box here, essentially. So if this continues for this week like this, then essentially you can expect the dollar to continue to weaken, obviously, and so that would drive up gold, that would drive up pound USD, that would drive up Euro USD and stuff like that. So as long as this keeps going the way it's going, and let's just say that that it works its way back down like this, then that's what you can expect. The dollar will be weaker, and then obviously it'll drive gold and all the other stuff up. So one thing to consider as well is, I know that on Wednesday we have FOMC news at 2. And that right there is probably going to make a move. Obviously, that'll affect the dollar. So I'm very curious to see what's going to happen with this and where the dollar is going to go from this. So I think that right there is going to help push, this dollar in whatever direction is going to go in, either higher or lower. But you can already see essentially what it looks like it's trying to do. All right. So I hope that going through these pairs was helpful today, guys. If you like this type of content, please let me know in the comments. Give it a like and share the video, guys. Appreciate it. We do have one last class of the year, guys. One last class. We're not doing any more classes this year. Just one more in October. So if you're interested in the 12-week mentoring, the last class of the year is in October. The link is in the description. And guys, thank you so much, and enjoy the week of trading.